Hello, I'm Steve Tomaszewski, and this is Meet Raise Green. Today, we will meet the three Raise Green co-founders you see with me here today and hear from them about the power of financing solar and climate projects with Raise Green. We're going to get into three key ways that crowdfunding is driving in solar project finance, such as how fast can you get a project financed? How can you ensure your stakeholders are happy and be on the forefront of clean energy justice? And how you can tackle the intractable problem of soft costs. Before we get started, I want to take a quick plug in our next event. In about 2 weeks, October 21st, we have our next Investor Day, and you can hear about the latest projects, raising money with Raise Green, learn from these successful issuers, and hear questions directly from the investors themselves. I also want to mention that if you have a question today, please go to our Q&A section and type it in. We'll try to get to you. If we don't, we will respond. I will respond personally after the event. Let's get started. In case you're just getting to know Raise Green, we make it easy for regular people to invest directly into climate action projects, and for companies and entrepreneurs to raise more directly from these impact investors. You can visit raisegreen.com and check out our financing toolkit for solar developers and EPCs. If you're a first-time small developer and you're in residential going to commercial, send me an email at steve@raisegreen.com. Let's have a short conversation. We look to fund many types of climate projects like solar, energy efficiency, battery storage, and renewable solutions. But we're seeing a lot more interest in the solar space, and we're thrilled because crowd investing is such a huge opportunity that is underexploited in the solar industry today. Let me turn to Jackie Logan, co-founder, head of our investor marketplace, to say a little more on why such a powerful innovation in project financing. Good morning, Jackie.
Morning.
Jackie, how can crowdfunding be used for rapid financing, and what's the compared to other financing options?
So thanks for asking. It's a great question, and I'm just going to rephrase it because you came in and out, at least on my machine. And that is, how can you were asking about, explain a little bit more how rapidly one can actually finance a project,
right?
How the timeline looks. So first of all, what is so amazing about crowdfunding, and it was created specifically for this purpose, is that the timeline is quick, and there's simplicity to the process. And we can see how this is gaining a lot of speed and acceptance, because in 2020, we actually saw a doubling of the amount of crowdfunding, just like we do here at Raise Green, from 2019. So it is definitely picking up speed, and it is definitely picking up acceptance across the marketplace. Anyhow, so how rapid is this? Let's say you have a solar project and you decide to issue debt or equity. We can do either on the platform, to round out your capital stack. The day you decide to raise money with us and have engaged with Raise Green, you're looking at a matter of weeks before investors can start to invest actually in your project, especially if we have a repeat issuer, which we have had at Raise Green. Literally, that can turn around in as quick as 2 weeks. Obviously, every project is unique, but Raise Green has been working incredibly hard to get this timeline down to a very, very quick turnaround and as easy for our issuers as possible. So the good news, if you'd like to leave your investment offering open as well longer and allow it to pick up even more investors' attention, you can do that too. So the length of time that the raise is open is really up to the issuer, which would be you, the individual involved with the solar project. So all that is to say that, with Raise Green, we make it really fast and easy. And we look forward to having the opportunity to work with folks potentially on this call.
Wow, fantastic. To your point about stakeholders, I'm going to move over to Matt Maroney, co-founder and chief operating officer, to tell us about how crowdfunding can be used to expedite that are facing our community, any community resistance. Matt, how does that come into play?
Yeah, thanks, Steve. And thank you for everyone on the call for making time and having lunch with us. When crowdfunding became a legal option for businesses to raise capital, it was literally the first time regular people had a chance to invest in private projects in about 100 years. And so when we talk about community equity, community ownership, it really means that the people near the project can benefit financially from the project existing. You can do that right now, as Jackie was mentioning, in a matter of weeks with regulation crowdfunding for your solar project. You know, there's a ton of reasons that renewable projects can run into community resistance. One is this fear of land grabs by big companies that come in, maybe your farmland to solar, or maybe the fear that, you know, the benefits won't be shared with the people who live nearby. So when you raise money with crowdfunding, you're sharing that profit with the people that invest. So instead of just giving someone a 10% discount with a PPA and having that money flow out of their community, they're actually paying their friends and neighbors with their bill. So people will feel a lot better about a project going up in their area when they're offered a chance to get skin in the game.
Okay, so that's a payback on top of any energy cost savings. Is that correct?
Yes.
And so you'll spend less time and effort rallying support for your development. Now, how important is that for a first-time community? And I really want to focus on that is looking into it today. How easy is it for them to contact Raise Green and yourself to get a project started?
Yeah, sure thing. So we built this for all of the people that are working on projects in their communities, but may not have the legal documents or the financial models to make it happen. These things are closely held secrets of some of the biggest law firms and financial companies in the world. And we give them for free to anyone that creates a project and lists on Raise Green. We've put a lot of work into educational materials for that. It's still a business, right? It's not like a hobby, but you can create your own green job with Raise Green. And just like millions of people didn't know they wanted to be a taxi driver before Uber came along, we think millions of people will take the advantage to become solar developers and raise that money on Raise Green, really become heroes in their local community, building the infrastructure that we need to be climate resilient.
They can go to the website right now at raisegreen.com and actually see some of the offerings and some of the past offerings, right, Matt?
Yeah. And if anyone has any specific questions about previous offerings, please do shoot them in the Q&A and we'll try to get to them at the end of the webinar.
Outstanding. Thank you, Matt. Now let's hear from Franz Hochstrasser, CEO, co-founder. Franz, what about the soft costs? And can you explain what a soft cost is and the pain point in the industry, even though solar installations are growing fast?
Yeah, absolutely, Steve. Thank you for doing this, convening us, and thank you to everyone on the line for tuning in. So despite the rapid decline in solar equipment costs over the past decade and the flood of new interest in sustainable finance, there are still just not enough projects to fund. About 70% of buildings in the US could have solar. So these are kind of commercial and industrial size buildings. Only 3.5% do, and that's a Wood Mackenzie stat. But that's more than 600,000 buildings that we need to put solar on if we're going to hit some of these lofty deployment goals. And the fact is that it's still just way too difficult to create and fund mid-size, or what we like to call community scale solar and climate solutions. So think between 50 kilowatts and 5 megawatts. And the soft costs are actually one of the biggest pain points and barriers to getting that done.
Can you explain a soft cost to our audience, Franz?
Yeah, absolutely. These are things like marketing, so not the actual equipment costs, but marketing, sales, transaction costs associated with legal and compliance, the cost of getting tax equity into the deal. And these sometimes can cost upwards of 50 or even 60% of the entire cost of the project. And so when you're thinking about funding your project, considering crowdfunding is a way to actually attack some of these soft costs and reduce them, or it can be. And you're going to see a few areas where that's especially true. So overhead is one. You're going to spend less time courting institutional investors and playing Tetris to ensure that their contract terms fit into your capital stack as the developer, for one. Second is customer acquisition costs. So as Matt mentioned, crowdfunding really does have big benefits for your brand awareness, and you can choose to market your security to the same core audiences that you might want to pursue as customers. So you'll see a kind of knock-on benefit in increased customer awareness and conversion by allowing them to invest in projects that you're developing. And then finally, and I think this is actually the most direct benefit, is that depending on the project's projected performance, you may be able to get an advantage cost of capital by raising money from the crowd. So these are three areas: overhead, customer acquisition, and cost of capital, where using crowd investing may be a preferred alternative to traditional financing options.
Wow. Thanks, Franz. Really sounds like such an interesting option for capital formation. Is there anything else you'd like to share with our folks today?
Sure. Yeah. I mean, we're excited about the growth opportunities in solar. This administration has come out with lofty goals, and this aggressive growth has to be pursued in a way, in our view, that also brings environmental justice communities and those that are hit first and worst by climate impacts along. So that needs to be a key piece of addressing this challenge. And the history of injustices from under-resourced communities, chronic underinvestment in those environmental justice communities in terms of infrastructure goes deep. And the sharing of these clean energy benefits with low-income communities and communities of color is a powerful way to enable access and ownership of the new clean energy economy. So when you're raising money with crowd investing, you're also able to open up opportunity for direct positive impact on regular investors who, as Matt mentioned, have historically not had access to these types of investment opportunities, and who may be part of marginalized communities. So if you want your business to be on the cutting edge of not just energy and solar deployment, but inclusive options and ways to enable more access to the clean energy economy, crowdfunding really can be a solution for your business model and allow you to have greater impact on the communities that you serve. So anyone out there, especially those looking at projects in underserved communities who are interested in being a leader in that space and really forging forth on the social and the environmental aspects of deploying these technologies, should really consider crowdfunding, and we're here to help.
Fantastic. Well, I'm so grateful to the three of you for spending time with us today. Want to make sure if someone does have a question, please go down to our Q&A section, put a question in. If we don't have time to get to your question today, we will personally get back to you this week, try to answer on a Zoom or an email. And we covered how straightforward crowdfunding is as a funding option and how it helps with stakeholder engagement and how it will offset your cost. Want to again invite you all to our upcoming Investor Day on October 21st, and we should make sure everyone is aware of that day. Please join us. If you want to see crowdfunding in action and hear how it's working for real issuers, join us October 21st, just a couple of weeks from today. And you can always learn about projects raising money if you're a small installer, an EPC, an electrical contractor, at raisegreen.com, or send me an email at steve@raisegreen.com. We got a few questions coming in. Let's see if I can get over to Franz to start. Franz, we have a question for you. How hard is it to raise money this way versus just applying for bank funding or pitching to investors?
Well, great question. I'm glad that that came up. We make it easy to run a crowdfunding campaign and raise it for your project. And we do that by giving you access to templated document sets that support the process, and also walking you through it. So in our view, it's just as simple, if not easier, to use crowd investing as it is to go after traditional financing through a commercial bank.
Okay. Jackie, we have a question for you. And that is, I have several power purchase agreements operating. Is there any way that Raise Green can refinance them so I can take that money and invest in new projects? Jackie?
Great question. And we've actually done a crowd financing for a very similar situation. If you pop up on our site and see some projects that have already been financed, you'll see it there. It's called Elm Lee. But high level, it is absolutely. In fact, the great thing about a refinance is it's an existing asset. It has a history of production and of the off-taker paying. So those are all things that are very important to investors as they think about investing in a project. So absolutely, refinancing is an opportunity through crowdfunding, and give us a ring. We'll help you get that done.
Well, and quite simply, it's already operating, it's already producing energy, and it's paying the bills. So yeah. It sounds rather simple. And again, raisegreen.com, or send me an email at steve@raisegreen.com. Matt Maroney, we didn't forget about you. Got a quick question for you. Can I raise money for any kind of solar project, or does it have to be a certain size or type of solar, battery, renewable? How would you answer that, Matt?
Yeah, definitely. And great question. So we are limited to raising up to $5 million per company per year. So that kind of naturally limits the size of the solar project. So the sizes we're looking at are basically 100 kilowatts to a few megawatts for more sophisticated developers. And we really think the big attraction for them in using regulation crowdfunding for projects of this size is their ability to set their own terms. Because most of the time, these smaller projects don't work out because the bank gives you a certain interest rate and a certain duration of debt. But with crowdfunding, you can actually flex those terms to what works for your model. So a 200 kilowatt project may not work with 5% debt at 7 years, but it might work with 5.5% debt for 9 years. And that's the type of flexibility that you have as an issuer on Raise Green to set your own terms, be a term maker rather than a term taker from some big fat cat in the bank.
Okay. I've got a few more questions coming in here. Jackie, can you finance projects out of the United States of America?
So regulation crowdfunding, which is the regulation under which we issue securities, requires that the company be a US company that is issuing the securities. Now, as a general matter, our focus has been for companies with assets in the United States. It is indeed possible to consider something outside, but for the most part at this time, we've been focused on assets in the United States.
Outstanding. Franz, we have a question for you. Do you only fund individual projects, or can you help raise capital for a solar company's growth in operations?
Well, that's a very good question. We do have the capability to raise for projects as well as for companies. We've been very focused on raising specifically for companies, but we have done corporate raises. And so if you're interested in that and you've got a good case, come to us and share the opportunity, and we're happy to take a look at it and see what we can do.
Well, I'd like to thank my guests, Jackie Logan, Matt Maroney, Franz Hochstrasser, and I'm Steve Tomaszewski. Thanks for joining us today on Meet Raise Green. And don't forget about Investor Day, October 21st. You'll see it on raisegreen.com. Take a look. You got a question, send it to me at steve@raisegreen.com. Always willing to listen to new developers, new projects, new municipalities, anything to do on renewable energy. And always remember one. Yeah, Matt.
Steve, sorry to interrupt. Before you hit the stop button, I wanted to give a big thank you to the folks behind the curtain that made this event happen: Antoine Mitchell, Lauren Hale, and Ben DeLynn. And so with that drum roll, please do give that final blow there, Steve.
Thanks, Matt. Thanks, Jackie. Thanks, Matt. Thanks, Franz. Everybody at the Raise Green team. And remember, real change starts with you. See you next time on Meet Raise Green.